I will be showing you guys the full 3 trade breakdowns from head to toe, higher time frame to lower time frame. So let's get right into it. This is today, April 2nd, 2024. So I will now start our analysis on the 4 hour. Let me also go into replay mode. So this is pretty much what the chart looked like when I sat down. I had my midnight opening price marked out, my 8:30, and if I play price, this is what I woke up to. This big ass candle down. So I was anticipating this 4 hour low, which was also this daily candle low right here, or pretty much almost the same thing. I was anticipating this daily candle's low to get traded to, which was also this untapped 4 hour fair value gap. So you can see we have these two down close candles, 4 hour order block, and 4 hour fair value gap. Since we've been in a bullish environment, I was not anticipating price to just continue to knife through this area, especially not today, a Tuesday, right? So even though we had high impact news, it really didn't do anything, which I'll show you right now. Here's the hourly candle. Let me play the 10 o'clock. You can see the 10 o'clock candle inside of that 4 hour fair value gap. And I'll go over the first trade that I took, which was actually a loss. So I was waiting. I was anticipating some kind of bounce from here. And this is where I ended up taking my first long setup, which actually failed. So I was looking here, and this is where I got stopped out. So let's go into replay mode one more time. I was looking at the 5, and we get this really strong candle close over this 5 minute fair value gap. The only thing that the only reason that I wish I shouldn't have taken this trade is because we never got a nice candle close over the 50% over this order block. That's the only thing that I can think about why this trade didn't work. You can see if we could look at the 5 minute, here is relative equal highs between here, this and this. This is also a 5 minute fair value gap. So I was anticipating this to be the draw. After we got this run on sell side, 4 hour fair value gap tap, 5 minute inversion. So now I was looking for this breaker block to hold. And it also swept 2 forms of liquidity. So I thought that was going to be a strong breaker block. If this would have only taken 1 form of liquidity, I probably wouldn't have taken this trade. But we sweep one, and then we sweep this low of day and that 4 hour fair value gap. So I was like, okay, this breaker should hold. I got filled on this down candle here, and my stop loss was just at this candle's low, which is around like 20 something points, and I did end up getting stopped out. As soon as I saw this little tap into this, I pretty much knew that it was going to not work, just because ES wasn't having any strength either. But not a bad trade whatsoever, but definitely something that I could have avoided just if I would have waited a little longer, just because a 5 minute inversion, I normally don't take those, but I did really like what the 1 minute setup was offering. So you can see what happens. These 1 minute relative equal lows are left for later. But so now I was only taking trades pretty much to the upside unless we got a nice move up, and then I could anticipate something down, and that's what I was waiting for. So I'm not shorting anywhere down into here, right? You could see that's why I was anticipating some kind of a bounce. So it was a lot of time before I actually took another trade. I was completely hands off all through this price action. I didn't take anything until it was around lunch. So actually it was before 11:50. So you can see we finally got a nice move up. I was actually trying to get in long here, but it never actually really pulled back for something that I like. You can see not really not a lot of entry opportunities. So now this is what I was anticipating. This is what the 15-minute was looking like. I was anticipating this high to be a draw, which it was. Let me make this like this. This high was a draw on liquidity. If you look at the 5 minutes, a little cleaner. Failure swing to get up here, and a big 5 minute candle close below this old liquidity. So now, if you look at the 1, what do we have? A bunch of relative equal lows inside of here, and if you draw a fib from the move, the low that started it, to up here, what are we anticipating? I'm anticipating price to at least return to this 50% level, and we have relative equal lows right here in the 1 minute, and we have a bunch of untapped 5 minute fair value gaps. So this is what I ended up taking. This 1 minute got inversed, but I was waiting to see if we would get a change in the state of delivery right here, and we ended up getting it right there. So that is your change in the state of delivery. We also ended up inverting this gap, and so what I was waiting for was to see if price would give me an entry opportunity. I didn't get in right away here. I wasn't extremely confident on this trade just yet, but as soon as I saw this create this one up close candle and this failure to go up here, this is where I got in. I literally shorted as soon as we got at 1147. I liked how this candle reacted. I was anticipating this high to be protected, so my stop loss looked like this. I entered there. Stop loss was up here, give my trade some room, and I was targeting 20 points on my contract. So I got filled at 55 exactly, and I sold at 35. So shortly after, price just retapped back right into this 1 minute fair value gap and ended up hitting my take profit. And this is why you don't hold for sell side liquidity in these kind of moves, right? If you're going to short in the opposite direction of the trend and the opposite way of the higher time frame order flow, you're most likely not going to be able to get as many points as you could if you were trading with higher time frame order flow, right? So I wasn't anticipating this entire move to get taken out. Like I said, this is that same 4 hour gap. So look what happens after I sold. Doesn't go much deeper than where I sold, and we ended up getting a bounce. And this is where I ended up fighting my next trade. So, like I said, I wanted to be bullish. So what was I anticipating? We have relative equal highs up here now with this long wick creating or engineering more buy side liquidity. We have a retracement into OTE. You can see that zero point 0.7 gets hit. Deep discount, fair value gap being respected, order block not even being used, and we had SMT at the lows. So let me get rid of this fib. ES, what time is this? 12. Okay. Here is ES. This is that same exact setup that I'm looking at on NQ. So here is 12 o'clock. You can see that its lowest low at the time was 12:03. It was taken at 12:14. NQ's lowest low is at 11:59. It was failed to be taken at 12:20. So I actually wasn't looking at the charts at this exact time. If I was, this would have been an A plus low risk buy right here, right off this order block, right off this fair value gap, whatever kind of entry you want. Beautiful. We get our change in the state of delivery right here on this candle. Fair value gap, down close candle should act as support. It does. You can have a really nice stop loss risk to reward. And now, how do you get your price targets? And why was I not scared to buy after this 1 minute gap got hit? So what was I looking at? I was anticipating price to continue to push higher to these 5 minute relative equal highs right here and this untapped 5 minute fair value gap. That same one that rejected price or that price failed to get into earlier. So what did I do? I used my standard deviations. This is the last manipulation leg before the distribution leg. Use that. What do we have? 1 to 1.5. 2 standard deviation lining up perfectly with the high of this candle. 2.5 with the 5 minute high. And I understood that the draw on liquidity was this 5 minute gap, so that was where I was targeting. Instead of targeting this high here, I was actually able to squeeze out a few more points and target up here. And the price ended up selling off from that. So this is what my entry looked like. We have our silver bullet zone here. Inversion gap gets violated. Now we have a fair value gap down close candle should act as support. Price never even gets into that. I buy inside of this fair value gap, inside of the inversion. I got filled at 73. My stop loss looked like this. Long position filled at 73. 11 and a quarter risk for a 22 point take profit. So this is my exact trade setup. This is what happens. Very little drawdown, if at all. I was in drawdown like not even 2 points, and my TP ended up getting hit. Again, this is why you do not hold and try and be greedy. Even though I only have one contract, I would have definitely trailed my stop aggressively. I wasn't anticipating for these fair value gaps to just get blown through today. Why? ES really wasn't moving too well, and it's a Tuesday. We only had 10 a.m. news on East Coast time, and that was it. There's no reason for price to be displacing, right? We still have NFP, and it's just Tuesday. A majority of the moves come Wednesday and Friday, or Wednesday and Thursday, excuse me. But those are the 3 trades that I took. One loser for around $400 loss, and then these 2 winners netted me over $400 each. But so definitely a nice, decent day on the funded account. Nothing too crazy. Yeah, that's it. That was the entire framework behind my trades. While I was looking for bullish trades, even though we sold off all these points overnight. And just to be careful, guys, whenever that happens. I shouldn't have even taken that trade that I first took. Like I said, when you have that big of a move overnight, normally the morning session is absolutely terrible. Thankfully, it did offer some decent moves, but other than that, today wasn't really a great day. You can see the range that we were inside of pretty much from 9:30 to close. So that's all from today. That's all for me today. But I hope you guys enjoyed, and I'll see you in the next one.